Let's also welcome on board Nitin Raheja then. Nitin, hi, good afternoon. While insurance is being looked at as, one of those compounding stories, would you say that in this market, it continues to look attractive for a fresh buy as well, be it the private boys or from the government stable?
No, I think clearly insurance has a long runway of growth as far as India is concerned. And, the point is that we are yet highly underpenetrated, underinsured as a country. Now, even if you look at it from the attractiveness of an investment avenue, uh, given what has happened to interest rates and where they stand, and if you look at tax-free rates where they stand, tax-free bonds trading at about 4.5% odd, some of the products that the insurance companies have come out and offered aggressively in the market are actually yielding, better returns, along with an insurance cover overlaying that. And hence you're seeing, them doing extremely well. So I think the fact that a lot of the private insurance companies tend to be very innovative and they react extremely fast to market conditions with the products that they have out in the market. And the fact is that also since the penetration levels remain low, I think this is a multi-year story, and this will continue to be a multi-year story for some time to come.
Sure. Within the private banking names, though, Nitin, and I'm talking about banks because they are the ones which are holding the market up today, one has clearly seen that there is outperformance in the corporate-led banks, case in point being ICICI Bank, and somewhat, at least on the charts, near term, you're seeing Kotak and HDFC Bank relatively underperform. Do you also believe that there is higher beta to catch up in an ICICI Bank as opposed to the others?
So I don't think the story of ICICI Bank is as much about corporate banking as about the turnaround that has happened as far as ICICI Bank is concerned. I think if you really look at the results in the last few quarters, Axis has been struggling with regard to the credit costs that they have on their books. Every quarter, it just seems that this is just when you think that this is sort of peaked out, you continue to see that happen in the next quarter. So Axis has really suffered due to the perception as far as credit costs. Maybe they are upfronting it and cleaning up their books the way ICICI was doing earlier. Kotak, on the other hand, if you ask me, the story has really been the fact that they've been conservative while growing the books. And since they've not grown the book aggressively through the pandemic, credit costs, and Kotak had the best credit costs in the industry. But when you don't grow your book and credit costs, even if they remain same or go marginally higher, they tend to look a little higher. So I would not really write off Kotak. I think Kotak will come back. ICICI Bank is a classic case where actually you're seeing two things where the worst has been behind. They went through a period when there was tremendous amounts of credit cost related issues and write-offs taking place. I think that's behind them. They're really focusing themselves more and more now as a retail bank, which is what has contributed also to the growth as far as they're concerned. And on top of that, it was the fact that ICICI was trading at a substantial discount in terms of its valuation to its larger peers. I think that discount is also now sort of narrowing down, and that has contributed for this outperformance as far as ICICI Bank is concerned.
By that logic, Nitin, is it time to buy wholesale NBFCs also? The ones I just look at how much premium has been paid to acquire assets of DHFL. Magna Fincom was acquired by the Poonawalla family few days ago. By that logic, does it make sense now to revisit NBFCs?
So I think clearly, if you look, my own view with NBFCs has been that what you're seeing with regard to Magma is again a larger play within NBFCs. The whole NBFC boom that happened discriminately across sectors is not going to take place. You're going to see a situation where industry-wise there is going to be consolidation. The large players are going to get larger. It's going to be the ability of NBFCs to be able to access money at competitive rates. I think that's going to be the clear distinguishing factor. So already in the housing finance sector, for example, you've seen that whole shakeout. You've seen two of the largest NBFCs actually consolidate and increase market share. And that is pretty much the trend you're going to see pretty much across the board. So either some of these smaller NBFCs will have to sell themselves out to people with deeper pockets and people with better ratings who have the ability to raise capital at cheaper prices. I think the ability of managing liability is going to be the key element as far as the NBFCs is concerned. So I don't see it being a broad-based sort of growth pattern, but I think it's going to be based selectively across sectors and on market and focused on market leadership.
All right, getting a move on right back to the equity markets. And Nitin, wanted to get in your take as to what the outlook is when it comes to the auto sector. For instance, Motherson Sumi, we've seen a very strong set of numbers. By and large, the recovery within autos as well has been very commendable. And this space has long prospects for growth. Where is it that you'd be comfortable putting money in with an auto and auto ank?
I think, once again, if you really look at the auto sector, normally speaking, you have, companies like, say, the two-wheeler pack, which has characteristics, if I were to call it, they are cyclical, but, the business has quasi sort of FMCG characteristics. When I refer to that, it means, they all have good ROCs and ROEs and they never require cash. And then you have the cyclicals like the commercial vehicle segment, which normally sees the biggest delta in terms of move whenever there is a revival in the auto sector as such. I think you've already seen one round of move happen out there. And then you have the tractor segment, which continues to do well, which is monsoon dependent, which is credit dependent. I think that's a sector which we continue to remain positive on and we think has got legs of growth. Below that, now you also have what the whole auto ank pack, and the auto ank pack, some of these businesses, just as you mentioned, Motherson, have demonstrated, exemplary characteristics in terms of the fact that they rarely come out to raise capital. They have good working capital numbers and efficient use of capital. So I think, we would sort of like to play this whole cycle now through either tractors at one level or through the auto ank pack, or pretty much across the board, which caters either to passenger vehicles or to commercial vehicles, which is seeing the big delta of rise happen.
Nitin, Kunal, thank you so much for sharing with us your outlook on the markets. Let's take a very short break right here on Closing Trades. Don't go anywhere. Lots more market chatter when we return.